do you or does anybody really think that they can turn off the steroids that they've been pumping into the economy? That's a very hard question to answer.
Hi, this is Steffi, and welcome back to the Financial Fox, investing and innovation ideas with a twist. It is Monday, and here is your recap from last week markets, macroeconomics, and obviously some crypto. On the show with me, it is Rajan, Dhall, trader and analyst at Kitco and Trading College. But before we go into the episode, remember, I'm not a financial advisor and all the content here is for informational purposes only. If you're not subscribed yet to the channel, make sure that you press the button and follow us on social media to stay up to date with our recent news and amazing interviews. Let's kick this off. Hi, Rajan. So let's kick this off and let's talk about what's happening in the market this week.
Yeah, of course. So, I mean, the main thing from the last week for me personally was the CPI print in the US. So it came up, pretty high. So 4.2%, and we were expecting at 3.6%. So that's for me, it's given the Federal Reserve a bit of a problem at the moment.
Okay, so what do you think is going to happen?
So the thing about this that really kind of bugs me in where the Fed's positioning is that the non-farm payrolls print the week before was rubbish, right? Everybody was expecting quite a high number. The consensus was pretty high. They didn't meet consensus or anywhere near consensus there. And then the next week we have the CPI print, which was higher than their expectations. Now, the Fed said that they were willing to accept an overshoot in the CPI until they meet full employment in the US. So, that's when they want to raise interest rates or tighten monetary policy, when they meet full employment in the US. But if CPI runs too hot for too long, how long are they going to be able to not raise rates or not tighten policy or cut back on QE?
Exactly. But the point is, about the employment. People, they want to go back to work now that it's summer? Because what I'm saying, they got all these benefit, they got lost money from the stimulus. Maybe they're just going to say, right, let's just have a nice summer, and then when the summer finish, I can always go back to work because there will be job there for me.
Of course, and we have to remember in America, the holiday system is very different to ours as well. They don't get much holiday time. So, or they're coming off a period of where they get all of this job support, where they've had a lot of time off. Obviously, like you said, some people might be getting used to it. Some people might not be getting used to it. But I think a lot of people did expect non-farm payrolls to be much higher than it was. And it was a really big surprise. I mean, I never go into this. I think non-farm payroll is a bit of a binary event. We never know what's going to happen, right? So I never really trade anything like that. But the fact that it's given them such a confusing policy stance now. So if inflation runs so high and then employment doesn't catch up, how long is Jerome Powell going to have to stand on the sidelines and keep giving it all this, we're going to communicate to the market and all of this kind of stuff, when the pressure is really on? The pressure is on for them now.
But do you think we can see stagflation?
Oh, I mean, that's a tricky one. I think after the point, because a lot of people think that this is transitory, this inflation issue right now. So when the economy starts to level off post pandemic, they think that that's potentially stagflation is going to be the next thing that we're going to have to be looking at. But I'm not sure, because really, once the stimulus gets brought down, everybody is hoping that growth is going to be able to pick up to the point where they're not going to need as much stimulus anymore. We've had it for so long. We've had stimulus for so long now. Do you or does anybody really think that they can turn off the steroids that they've been pumping into the economy? That's a very hard question to answer.
Exactly. And also, the jobs out there, they might not be the same that they were pre-pandemic. So, people are more lazy, jobs are not there. Supplies is also struggling as well.
I mean, it's obviously really hard to say if they're lazy or not, but they might not also have the skills, right? Because it's these greener jobs, all of these, electric vehicle, climate kind of, they're the jobs. Have they been trained? Is this is this going to be sustainable at the pace that they need it to get done? And like, I know you were talking to me recently about, the copper run and, the metals like aluminium, copper, and all of this kind of stuff. We're seeing the great price rises in these commodities now. And that's showing that the orders are coming in. The supply and demand, factor for this is coming in quite heavily because we're seeing copper shoot up so quickly, and a lot of the metals involved in the electric vehicle market shoot up so quickly. You're right. Can the economy sustain the same pace as those price rises? And that's really, really important to see in the coming months.
Exactly, because a copper mine is not going to just switch off and just to produce copper straight away. And the same is also with the oil market. To drill an oil well, it does take time. So what I'm trying to guess is that is the supply going to keep up with the demand?
Yeah, so I've been looking really closely last week at the miners. So I was looking at BHP Billiton, Antofagasta, Anglo American, all of the big UK miners, really. I like following them quite a lot. Obviously, working for Kitco, I look at all the metals companies in general. So, they've had a strong retracement over the last week or so. Yeah, I mean, everything has pulled back over the last week. The stock market's pulled back quite heavily. And then on Thursday and Friday, we started to reverse a little bit, didn't we? We came back up. So, I think there's good opportunities there because I don't think they're keeping up with the demand, those mining companies. Like you said, the demand's there and everybody's looking for these raw materials. I think the sell-off was an induced sell-off because we were overheated. And what I didn't understand about this sell-off is this is why fundamental analysis bothers me. I like technicals a lot, right? So the fundamental analysis bothers me because one day the producer prices and the inflation is a problem for the stock market one day. 2 days later, on Thursday and Friday, all of a sudden it isn't a problem, and we're heading back to the all-time highs again. And it's really that repricing happened so fast on Tuesday and Wednesday, and all of a sudden on Thursday and Friday, the miners are coming back. Daimler are coming back. I had Goldman Sachs as well come back as well in the US. They were all turning all at the same time. It's like Monday and Tuesday didn't even happen.
Yeah, definitely. And the market is so volatile that now another final question that I want to ask you, should people start to consider gold seriously? Because, after, March last year, we kind of see a complete rush to buy gold and then it kind of settled. Now we don't know what is going to happen, with the Fed. And maybe, do you think that gold is going to come back at all-time high?
Okay, I'm super biased on this subject anyway. I think, asking me is interesting, but I think so. Yeah, I think gold, it's always going to be in demand in a pandemic, especially like, for example, when we've got India and in Asia having those kind of problems that they're having at the moment, because the safe haven is gold, right? Jewelry demand is going to fall slightly because they're probably going to go in lockdown and they can't travel as much as they used to be able to travel. So we'll get a bit of a pullback in jewelry demand in India. But as long as the pandemic's there in Asia, there's always going to be, I feel like, a safe haven demand for gold. Where the problem is in the area that you really like, is the cryptocurrency area. That's the thing now. Like, I'm seeing a lot of people who used to talk to me about gold in general starting to talk to me or shift over or a percentage of their allocation anyway into the cryptocurrency market. And that's I think, quite clearly affecting gold investment.
So you basically see Bitcoin becoming, or because, we're kind of already there, an alternative to gold in terms of like a safe haven asset against the market volatility.
Yeah, because these are non-yielding assets. So gold doesn't yield anything like fixed income does, and Bitcoin doesn't yield anything like fixed income does as well. So when we get the yield rises of the 10-year, the 5-year in America, then Bitcoin and gold suffer a little bit. We get a bit of money going into fixed income, right, at that stage. But when that starts to plateau and fixed income starts to just relax a little bit, like it has done recently, then it's always seems to be an argument. What are you going to choose? Are you going to choose gold or are you going to choose Bitcoin at that stage? And that's what is the issue, and it's a generational thing. I think the millennial generation, if you want to call them that, but a lot of savvy investors are choosing that because it's got more of a rate of change. The trajectory, the volatility in it going up is a lot quicker than it is with gold, isn't it?
Yeah.
And I think that just attracts that extra bit of fashionable attention.
Okay, so you think that the Bitcoin is going to reach the capitalization of gold, and if it does, when? I mean, we say it's generational, and I do agree with you because you see, young people. It's also the people that are more in the tech industry as well. They understand
they do.
the scarcity of gold, of Bitcoin, comparing it with gold. Obviously, the capitalization now is still gold, is still bigger. But do you see, they are going to become equal? Perhaps Bitcoin is going to be more valuable.
Yeah, so I generally don't like to put forecasts on this for one reason. There's a really strong reason why I don't like to put forecasts on this, is that the big cloud hanging over Bitcoin and cryptocurrencies is that if the central banks start to release their own, or there are some other ones, and then the regulation on taxes or the regulation on Bitcoin changes in America. If first of all, that's the biggest market, I would say that it could change. That's going to cause a big, big problem. And I don't know how long the governments are going to allow this to happen. I'm not sure about that. The SEC, the US government, I don't know how long they're going to allow this to keep going for. That's the only one thing that's in my mind stopping me saying that it's going to reach the levels of gold, okay? I think probably the more likely scenario is that it will, yeah? One last thing about the difference between Bitcoin and gold, right? So I know that with the ledger technology, people are always going to know where the Bitcoins come from and who owns it, so to speak, in that scenario. But if it's me as an investor, diversification is key. I will hold some funds in cryptocurrencies and I will hold some funds in gold. But if all hell broke loose, like worst case scenario ever, the tangibility of gold, I think, is unfathomable to this next generation. But this is why gold is so important. Houses can burn down, computers can crash and burn. People can do these things. Hackings and all of this kind of stuff, and burn. Like if you're holding a Bitcoin on a flash drive, and all this kind of stuff. That doesn't happen with gold, right? Like the real old school investors will remember that. That's what attracts them to gold, really, is how safe it is. That's the store of value that gold has. I don't know, and I'm not as savvy enough to know whether crypto can come up with a solution to that. And
you can take the Bitcoin off any kind of online wallet and have in your hardware, so that you kind of will protect your cryptocurrency. There is one advantage that I would say that cryptocurrency and mainly Bitcoin do offer, is the fact that to store gold, it does cost a lot of money.
It does.
You can't keep all like bullion in your house. It's kind of like dangerous as well, I would say. And this doesn't happen with Bitcoin. So I think technology has brought something completely new and innovative to the space. But obviously, we can only stay here, watch, and see, how mainstream adoption happen and how the market goes. There is always kind of like this crazy question that I have about Bitcoin, is that, Satoshi build the network, and they still, or he or she still have quite a lot of Bitcoin.
There is.
They have the key of the protocols, so you never know. What about one day they just the Bitcoin, or they can damage the protocol? Is always a question that you ask yourself. But I think everywhere there might be opportunity that something goes wrong, and
but that's the unknown variable. That's
exactly.
It's a good thing that you think like that. And it's everybody needs, even all investments, there's that unknown variable. We could buy a stock in a company and they could collapse. Like the best one for that example is, you remember Patisserie Valerie, the cake company? Oh, that accounting fraud. Like, I had a small amount of money with them. It didn't hit me badly, but they were performing so well when that accounting fraud thing happened and it blew up. And with any investment, that's why diversification is so important, isn't it?
It's that, well, we can mention Boohoo, another one that happened earlier on this year. So it's true, there is that unknown variable that sometimes can just trick you. But I think every investor should really understand that when they are putting money somewhere, something can go wrong. And
I mean, the great question is in 5 years' time, I always look at it like this, okay? In 5 years' time, if you ask yourself, would it be a bad decision or a good decision that you did or didn't invest in Bitcoin now? Yeah. That's a very interesting thought for me. If in 5 years' time, let's say I put $2,000 in Bitcoin or whatever now, or in some kind of cryptocurrencies now, and I lost it, it wouldn't be like, the end of the world, right? But if I didn't do it, and in 5 years' time, I saw the value of it hit 100K, 150K, or whatever it might get to, then I think the pros outweigh the cons in that scenario. But the same can be said with gold, right?
Yeah, well, gold, it doesn't move like
it doesn't.
Even though there is some kind of Bitcoin now is moving, but it's not moving crazy way like it did in the past. So even now, if there is a correction, I do think it's going to settle around 20,000, 15,000. I don't think it's going to go down to 3 because it's such a much more mature space. When you're talking about other crypto, I think then it becomes a little bit more a question mark.
A quick thing about next week, okay? So we've got the FOMC minutes next week, okay? Now, my biggest thing about the FOMC minutes with the Fed is, for me at the moment, what's going through my mind is, did they miss the boat on tapering the QE while Joe Biden announced his infrastructure plans? Okay, so that's what I want to hear about. They're not going to mention it in the FOMC minutes because it's the meeting minutes from the last meeting. But I want to see, what a lot of people think about that. They had a good opportunity. They were kept saying, "Oh, we're waiting for fiscal stimulus. We're waiting for fiscal stimulus." All the time, that's what I was hearing from the Fed. When the fiscal stimulus came and they announced it, the Fed did nothing. Yeah. So that's what I want to see, how that story develops over time. And that's what I'm basically waiting for to hear from the FOMC. I'm not saying we're going to hear about that in these minutes, but I'm just saying, reading the minutes and listening to the minutes, hearing them talking about tapering from the out of the emergency pandemic fund and all of that kind of stuff. That's what I want to try and get some clues about, really. That's what I'm looking for next week.
Okay, fantastic. So let's see what's next week bring, and we can reconnect then and, chat more.
Yeah, perfect. Thanks, Stefania.
Thanks, Rajan.
Yes.
Okay, that was a great chat with Rajan. So, we are kind of try still to understand how the Fed is behaving and what is happening to unemployment in the US, but, also here in Europe and in the UK. And that is going to be quite an interesting element because we are seeing pricing going up. Unemployment, is not getting sorted, let's call it that way. And so we are getting to a stage within the economy that is start to get worried. And we are looking to see what the Fed is doing regarding interest rates. So it's kind of like transitionary period. And this is what the Fed has always been saying. We are in a transitionary period. We gave all this money to people and now, prices are going up. People are not coming back to work as expected. So, we are watching what is happening, but definitely commodity prices has been going up. And that's very interesting. Copper, one of the big winners, but, so also some other interesting metals such as rare earth and, perhaps aluminium. Oil price as well going up. And, all these kind of different dynamics are making us reflecting about supply and demand and what is going to happen in the future. But, I think, what we can only do is we can only watch what is happening in the market and make sure that we have a diversified portfolio. And when you are looking at a diversified portfolio, you need to make sure that you identify and you have some safe haven assets. And here we are talking about gold and we are talking about Bitcoin, right? And it seems from what Rajan was saying, it's like a generational thing. So, the older generation prefers gold and the younger generation prefers Bitcoin. Kind of fundamental are the same, a limited supply, uncorrelation to the market, but there are some kind of like difference because gold is expensive to store, Bitcoin is not expensive to store. The level of security, this is also something that makes people thinking, with gold, you can put it down, in your house, in a safe deposit box. It seems more secure than what can happen to Bitcoin if you have an online wallet, but you can always take your Bitcoin down to keep them, have your own key, which is all the point of crypto. And so you're sure that nothing can really happen to you. And it will be interesting to see how those two safe haven assets, they are gonna change and they are going to move going forward in the market, and also if Bitcoin is actually going to overcome gold in the future. But those are all like question mark because we never know where the market goes. We can't predict what is happening with Bitcoin and with all the crypto industry. I mean, the price just moved on Elon Musk putting out a tweet, which is crazy, but is the truth. So I think for people that want to invest, they always have to remember what Rajan said, the unknown variable. And this unknown variable is very important because any investment you do, whatever is in the stock market, whatever is in crypto space, something can always go wrong. But you can do many, many things to make sure that you limit the risk. And I think this is something very important. But most importantly, only invest what you can and keep a diversified portfolio. That's obviously one of the biggest, let's call it, advice that is being given to people is always to keep a diversified portfolio, because if one thing goes down, you can hedge with the other assets. And in today's world, there are different asset class that you can invest. So keep an eye on, make sure you do your own due diligence, make sure that you understand the risk, and also remember the unknown variable, because that is key and it can't really be forgotten. I will see you next week.